Let's go back to October 1973. The world is a different place. Gasoline still costs mere pennies, and the words energy crisis are whispers in the corridors of power, not screams on the front page. But far from the bustling oil markets of New York or London, a seismic shift is about to begin, deep within the ancient heartland of Persia. This is the story of how Iran's black gold reshaped global power, only to become its ultimate curse. Imagine the gilded palaces of Tehran, bathed in the glow of a prosperity unimaginable just decades before. The air hums with the promise of modernity, new avenues carved through ancient neighborhoods, Mercedes-Benzes purring past bustling bazaars. In 1973, Iran stood at the precipice of an oil boom that would catapult it onto the world stage. For years, the Shah, Mohammad Reza Pahlavi, had been patiently consolidating control over his nation's vast petroleum reserves. Though officially nationalized in 1951, foreign consortiums still held significant influence. But the Shah was determined to fully seize the reins of his nation's wealth. He found his moment in a global energy crisis brewing far from his borders. As OPEC, the organization of the petroleum exporting countries, flexed its muscles, Iran, a founding member, was at the vanguard. Following the Yom Kippur War, Arab members imposed an embargo, and OPEC nations began to unilaterally raise prices. The Shah, in a bold move, demanded an unprecedented increase, stating, "Oil is a noble product. We want to buy technology, not simply oil." In just 3 months, from October 1973 to January 1974, the price of a barrel of crude oil quadrupled, rocketing from roughly $3 to over $12. For Iran, this meant an explosion of wealth. Oil revenues surged from $5 billion in 1973 to an astonishing $20 billion in 1976. This windfall fueled an ambitious modernization program, transforming Iran's infrastructure, military, and education system at breakneck speed. Factories rose from the desert, universities expanded, and the Iranian army became one of the most formidable in the region. The Shah envisioned Iran as the fifth industrial power by the turn of the century, a modern, secular state powered by its endless flow of oil. But this rapid transformation, funded by a seemingly limitless supply of black gold, was building on foundations far less stable than they appeared. Beneath the glittering facade of prosperity, a growing tide of discontent was swelling, destined to wash away the Shah's grand vision. The vibrant, modernizing Tehran of the mid-1970s gave way to a city choked with revolutionary fervor. By late 1978, the streets were a tempest of protest, the scent of tear gas mixing with the cries of dissent. The Shah's petrodollar-fueled modernization had been too fast, too uneven, and too dictatorial for many. The rapid westernization alienated conservative clerics, while the lavish spending and corruption angered the burgeoning urban poor and traditional merchant classes. Oil wealth, intended to secure the monarchy, inadvertently became its undoing, creating vast inequalities and fueling resentment. In January 1979, after months of escalating unrest, the Shah fled Iran. Just 2 weeks later, Ayatollah Ruhollah Khomeini returned from exile, igniting the Islamic Revolution. The new Islamic Republic immediately solidified control over Iran's oil industry, expelling foreign companies and nationalizing remaining assets. This was a triumph of sovereignty, a declaration that Iran would no longer be dictated by external powers. But the revolution's radical stance quickly drew international ire, particularly from the United States. In November 1979, the hostage crisis at the U.S. Embassy in Tehran saw 52 Americans held for 444 days. In response, President Jimmy Carter imposed the first wave of comprehensive U.S. sanctions, freezing Iranian assets and banning most trade with Iran. Then came the 8-year Iran-Iraq War, launched by Saddam Hussein in September 1980. This brutal conflict, often dubbed the First Tanker War, saw both sides targeting each other's oil facilities and tankers in the Persian Gulf. Iran's Abadan refinery, once the world's largest, was decimated. Oil production plummeted as facilities were destroyed, and the world market became wary of Iranian crude. While oil exports were vital to fund the war effort, the conflict drained Iran's resources and further isolated its economy. The revolutionary promise of true economic independence, fueled by oil, now faced the harsh reality of war and mounting international pressure. As the war ended, Iran was left with a shattered economy and a global oil market increasingly skeptical of its reliability, leaving its once mighty oil industry struggling for survival. The 21st century opened on a decidedly bleaker prospect for Iran's oil. Imagine an oil terminal in the Persian Gulf, once bustling with supertankers loading millions of barrels, now often quiet, its infrastructure aging under the relentless desert sun. For decades, Iran has fought an uphill battle against a relentless tightening of international sanctions, primarily from the United States. Following its nuclear program revelations, the screws turned tighter. The Iran-Libya Sanctions Act of 1996 had already targeted foreign firms investing in Iran's energy sector. But the most crippling measures began to take hold in the late 2000s and early 2010s. The Comprehensive Iran Sanctions, Accountability, and Divestment Act of 2010, CISADA, followed by the National Defense Authorization Act in 2012, aimed to isolate Iran's central bank and make it virtually impossible for any country to buy Iranian oil without facing secondary U.S. sanctions. These measures were devastating. Iran's oil exports, which had hovered around 2.5 million barrels per day in 2011, plummeted to less than 1 million barrels per day by 2012. Foreign investment in its aging oil fields vanished, leading to a severe decline in production capacity and technological stagnation. A brief respite came with the 2015 Joint Comprehensive Plan of Action, JCPOA, the nuclear deal. Sanctions were eased, and Iran's oil exports surged back, reaching over 2 million barrels per day by 2016, injecting billions back into the struggling economy. But this recovery was short-lived. In 2018, President Donald Trump unilaterally withdrew the U.S. from the JCPOA, reimposing and vastly expanding sanctions with a stated goal of driving Iran's oil exports to zero. The impact was immediate and brutal. Tanker tracking data shows official Iranian crude exports plummeting again, at times reaching historic lows below 200,000 barrels per day. While Iran employs various tactics, ship-to-ship transfers, reflagging vessels, and sophisticated smuggling networks, to clandestinely export some oil, the official market for its crude has largely evaporated. Billions in revenue are lost annually, stifling economic growth, crippling vital industries, and leaving Iran's once mighty oil empire a shadow of its former self, its potential chained by geopolitics and punitive measures. What happens next depends on a complex interplay of international diplomacy, the future of global energy demand, and Iran's own internal political shifts. As the world transitions away from fossil fuels, Iran faces the dual challenge of sanctions and a shrinking market, making the path to unlocking its vast oil wealth more uncertain than ever before.